Hi, my name is Erin. Welcome to today's episode of Adulting 101. Today we're talking about health coverage and your taxes. If you haven't done your taxes yet, you have until April 15th to get them done. Since 2014, your health insurance and taxes have been linked. The Affordable Care Act, or Obamacare, requires that everyone maintain comprehensive health coverage or risks paying a fee. Now, if you follow politics, you might think, wait, didn't Congress get rid of that fee? And you'd be right. In 2017, Congress reduced the penalty for not having health insurance to $0, meaning there will no longer be a fee for not having health insurance. However, that doesn't go into effect until next tax season. So if you didn't have health insurance during 2018, you may still need to pay a fee now. If you did have health insurance for all of 2018, congratulations, you won't have to pay a penalty. You just need to check the box asking if you carried minimum essential coverage for all 12 months of 2018. If you're unsure, you should get a form in the mail from either your health insurance carrier or the marketplace that states how many months you had qualifying coverage. Most young people get their coverage through their job, their parents, Medicaid, or their college. If that's the case for you, then the cost of your plan won't impact the taxes you owe or the refund that you might get. Just mark that you had health insurance for all of 2018 and then you're good to go. If instead you purchased an individual plan through the Obamacare marketplace, you likely got help from the government to cover the cost of your plan. In fact, about 85% of people who buy health insurance through the marketplace receive some financial help to lower their plan's cost. This financial help is known as advanced premium tax credits. These tax credits lower the monthly cost of your health plan, making it easier for you to afford. For example, if you purchase a silver plan through healthcare.gov that has an actual cost of $200 per month, and you qualify for a $150 tax credit, you would only actually pay $50 per month for your plan. Now it gets a little tricky. The tax credit is based on your projected income for the year. When you enrolled in your health plan, you were asked to estimate your annual income. Because your tax credits were based on a projection rather than actual income, you'll now need to go through a process called tax credit reconciliation. That means you'll compare how close your projected income was to your actual income for 2018. If you ended up earning more than you projected, you may have to pay back some of your tax credits. If you earned less than you projected, then that means you should have gotten a bigger tax credit and may get a little more added to your refund. If you're unsure how much of a premium tax credit you have received each month, don't worry. You should receive a form in the mail called 1095A, which will have all the information that you need, including your health plan, your premiums, tax credits, and all covered individuals. You don't need to send this form to the IRS, but you should use it as a reference when you're completing your federal tax return. If you're completing your taxes on your own, you'll need to include a form called 8962, where you'll complete the tax credit reconciliation. While this all might sound complicated, you don't want to file your tax return without reconciliation. That's known as failure to reconcile and can jeopardize your eligibility for tax credits in the future. And there's people who can help. There's a program called Volunteer Income Tax Assistance that offers free tax prep to low and middle income earners, and they hold events all over the country. And you can always reach out to us at younginvincibles.org, find us on Twitter at younginvincible, and drop a comment below. Thanks everyone.